Sam says, sorry I'm late. Good afternoon. I made a great profit in puts in Lulu and a downtrend I could pick. Fantastic. I have a gentleman, Martin, who emailed me. I don't remember the exact numbers, Sam. He had a bull put credit spread on Lulu. Like I said, I don't remember the strikes. It expired today, as a matter of fact. And I don't remember what the bounce was. It might have been this, actually. So anyway, long story short, I'll show Lulu's chart in just a second. There we go. So there's a bull put there. I don't think this is Martin's exact numbers. And I want to go to a 3-day chart, 5-day. I'm going to go to a 5-day chart. Okay, guys? I'm going to take a look at that. Oh, we're going to go hourly. All right. So here's that dip Sam was talking about. Lulu started to peel down. Remember, this is your 5-day chart. So this was, this week, Monday. And it just started to move down. And Martin, the customer I talked to, I think I talked to him mid-Wednesday, and it was starting to move down. And he said, if I see it, mid-Wednesday, he said, if I see it move up, I might be okay. But if I start to see it come down, I'm going to buy to close. I think it was at 335. He's going to buy to close to 335. So that was one of our 8 ways we talk about to manage a bull put spread, is if you think the stock is weak and it's falling, you've hit your trigger point, your 1% rule, which you did. If you think it's going to continue down, you can buy to close the short and leave the long open. And that's exactly what he did. And when he got out, I think here, when it started to recover, he ended up making $1,300 on this one. And on the buyback cost here, only lost maybe it was 800 or 900. So he essentially was in the bull put, closed this leg to just have the long put. And when he got to the profit line, he closed it out. So he made a $400 profit on a position that would have been a $100, $200 loss for just one contract if he left it open. And that's exactly what, you did it opposite. Okay, so that was what Martin did. Sam said Lulu was a bull put initially, but I turned it back into a ratio put spread in advance before the shares dropped. So it gave him that extra downside. You're in an SPY straddle for the election. We talked about why the short strangles and short straddles on SPY with a long put repair for Kaushik might not be a great idea, because they're neutral positions, but a long straddle, more likely a long strangle now, if volatility has been increasing, but a long straddle or long strangle was the opposite direction. What Sam was talking about is he was in initially a bull put credit spread, and then what he did, create a ratio, so he bought an extra one, which turns it into something that looks like this. So as Lulu falls, he's in the profit zone. Okay, that's another way to manage it. And a ratio spread might be used for Kaushik's position too, but I think the price was too high as well. Okay. All right. So he said you paid $14 for the November 9th expiration, the straddle there as well. You traded Snap this morning and made 50% on the 38 calls. Good. Apple Bull Put, now out of 21 trades, three of the 21 Apple trades you've been doing since this summer were losers, 18 winners, 3 losers out of 21 trades, but the losses, of course, were controlled and just small. You did not buy put at 340, kept buying puts at 340. Okay, so back to your straddle there, you're talking about 340 and 345 puts as well. 880% in Lulu on the position there, the ratio put spread. And the ratio put spread is interesting because if done right, well, let's just look at one on a risk graph. It's much easier than doing it this way. There we go. But Lulu is a great example of management techniques that worked by the ratio spread and by one of the 8 ways to manage the bull put as well. Buying a short, leaving long open, they can work if you get the move. Absolutely. Here's my bull put. And so what I would do in the ratio here is buy 2 of them. I chose today's expiration just as an example of what it looked like. Okay, so this is what you kind of want in a ratio spread if you can find it. If the stock's moving against you, what do I mean by that? If I was in the bull put, as Sam mentioned, and the, was I 335? Yeah. I was in the bull put, as Sam mentioned, and the stock started to move against me. When I add the extra put, normally what I see is a profit and loss chart here, where it's a loss here because of the higher debit, a bigger dip, wider upper lower break even, and then eventually it profits. But if you enter the ratio back spread from the beginning, then if you get the small credit, then even if the stock is wrong and it moves up, you make a profit. You have to watch the Death Valley zone, that little V shape there. But if it falls as you expect, you still make a fair amount of profit. And this is something, actually, it's a little bit of a different position. I'm not saying you should convert your long put that you have right now into this ratio put spread, because you won't get a credit. Okay, you'll still have a loss to the upside, and you won't really change the price because it's already fallen. But if you, from now, if you're looking for a bearish play on a broad-based index or ETF, but worried that it might not go in the direction you want, this ratio put spread, back spread, excuse me, of buying 2 and selling 1 might get you in a position where even if you're wrong, you have a profit. Now, these break-evens, though, can get weird. This one's not bad on Lulu, 326 to 332. Why is it not bad? Because I chose today's expiration. Couldn't get these prices anyway if we wanted. They're all pretty much just bogus prices at this point. Here we are at 5:30 p.m. in the afternoon. So I might not be able to get this type of spread that I want without a large upper and lower break even and a large Death Valley here in the center with real prices. Okay. All right. So I just wanted to mention that as well in that case. Okay, so you bought it. You all got a 320 call at the low on Lulu and then sold at 332. Good. John says, can you show the BA covered call trade again? Thanks. We weren't really showing a trade. We were showing old trades that expired in the portfolio. And then I just randomly entered as an example a bull call debit spread on Boeing. I'm sorry, John, a bull put credit spread on Boeing. The covered calls I were talking about were just old positions that we'd entered for a webinar example back in May that I'd forgotten about in this portfolio, in our webinar portfolio, where we were comparing 2 different covered call structures and a married put position with different prices. And then we went to the analysis. It was, I'm sorry, analysis by position. The one position was an October 170 put. I just put that it expired worthless. In that case, you know, the stock here is at 357 cost basis for, I'm reading that wrong, I apologize. The original cost basis was 149.52 on Boeing, and the 170 put was sold for the October, far out in time October put was sold for 35.75. And at 167.36, that expired worthless. Okay, so it's I'm sorry. My apologies, John. That's the married put. I'm really sorry. That's the married put. Here's the covered calls. It was a June 170 call. That's why it looked wrong to me. But the sale was at 4,100. Stock was at 1,390. This was after the stock had moved up. And in May, when the stock was about 165, I think, the June 170 call was sold for $41. And that was compared to sort of an at the money strike, slightly in the money call, which was at 11.14. Not the same day. 5.5 versus, yeah, 5.5. Okay, I know. This was the customer. Sorry, John. I know it's confusing, but that's why we weren't spending time on this. These were just old historical transactions. For an example, this was the position the customer was in. He had bought shares at a Boeing at 145. I don't know the exact day. The webinar was on 5.5. And we sold the June, he had sold the June 132 call for 11.44 at the time. Because the stock had moved down and he was worried and he used that as a hedge. But you see kind of the numbers here. If he had bought the stock at 145, he sold the 132 call for 11.44, he was only getting 143.40 back. Okay, so he was still at a loss of $1.60, and the stock had run up on him to a higher price. And then we wanted to look at what would the position be if we had entered it on 5.5 at the 13.90 price, which someone said their cost basis was. And now that the stock was trading up to the price range of 150 or 160, what would the June 170 call look like as a return? These were not real trades. These are not examples. These are not recommendations or suggestions. These are just the positions, John, that we were closing from an older presentation that I had not managed, but served our purpose to answer Bill's question about the new view of analysis by position and analysis by symbol. And going back to that bull call debit spread I created on the fly, bull put credit spread I created earlier on the fly was just on a whim. Okay, I don't even know if we said we were going to do it before the election. That's why I chose October 30th. But I'm not doing this at all because there's earnings between now and expiration, John. So I was using this as an example because we were in that Boeing field, and I want to show all Boeing positions in that portfolio as well. Okay. And Sam mentions he's got an Apple earnings trade too, a straddle. In November, bought it at 115. So if he doesn't get the move he wants in earnings, he might see the move he wants after the election as well. Or I think Apple's come out after the election, if I'm not mistaken, also. It's not the 20. I think it's the 13th. It's the 13th. That's where I have my stock repair on UVXY. And so I just need the stock to be UVXY, I'm sorry, to stay above 1622, something like this, 1628. I think it's 1628. And that'll be at break even. And my cost basis, again, as I mentioned, I had lowered it down to about 18, but the stock repair I'm in right now gets me as long as it stays above 16. That's going to be tough with the election, but I didn't want to do it before then because I couldn't get a repair. So I did it on the 13th, but I know after the election, there's a big chance UVXY could fall further, as could the VIX. Once it's done, it's done. It doesn't matter the outcome. However, if the market reacts unfavorably to the result of the election, the VIX and UVXY could pop up and I'd still be in relatively good position. So that's where I'm. You have no trades in UVXY. Nice new lows. This VIX has been harder to track recently. It's been harder to trade and follow. I haven't touched it. Sam, you've rubbed off on me too much as I've been focusing on UVXY. And of course, one of the reasons I was focusing on UVXY is why I told you that I got in at the wrong time, I think, mid-September. And I've just been getting this, maybe the 10th, the 12th, something like that. And I've just been not crushed on it, but it hasn't been doing too good. Maybe I do have it in the portfolio here, close to what my cost base was, but no, I don't. Okay. All right. So in any case, all right. Well, we're at 5:46 p.m. Eastern time. I want to encourage you, if you have any last minute questions, to go ahead and send those in, of course. And while we're waiting to see if any last minute questions come in, I do, of course, want to remind everyone, as I mentioned to John with the Boeing bull put there and the closed covered call, that today's material are my thoughts on your questions, designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or direct trading suggestions, i.e. that bull put we showed as an example on Boeing. I would never trade that. I just used it as an example. I didn't look to see the earnings. I did select the expiration prior to the election, but it didn't matter because Boeing has earnings coming on the 28th, and I'm not doing a bull put, a bear call, short straddle, short strangle, iron condor, any kind of neutral to bullish, neutral to bearish directional trade. As Sam mentioned, if I'm doing something along those lines, I'd probably be looking to more of a long strangle or a long straddle position, buying a call and a put, even with the volatility pretty high, to take advantage of the known event with the unknown outcomes and the unexpected moves. I don't want to be in a short directional position where a sudden swing because of an event I could have avoided could put me at 100% loss in the bull put, bear call, or a huge loss on, say, a short straddle or short strangle. So none of these were recommendations or direct trading suggestions. Options involve risk, as we've seen today, may not be suitable for all investors, but there are ways to manage them. There are ways to adjust them. And I think we saw a lot of that today as well for some of our positions. Let's see here. Following up on that, we showed some good tools today. We took a look at the portfolio tool. Didn't see any searches today. But we did talk about some of the management techniques and more. If you liked any of the tools you saw today, you can take your 14-day free trial at any time. Just go to powerup.com, put in your name and email address. No credit card, no billing information is required. You have full use of the site for 14 days. After that, of course, the subscriptions start at only $45 per month. And then you can upgrade to delayed service instead of end-of-day data, or even real-time service. Delayed data starts at about $65 per month. And of course, you can add history on top of that to have the delayed data and the history for only $100 per month as well. Other free stuff, well, there's the archived webinars page. It's at poweropt.com/webinars.asp. It's a public page. The first 4 or 5 videos in one of the 4 sections, such as options strategies, options concepts, or requested topics, might not be available to trial members or public. But subscribers will have full access to them. But there's probably about 30 to 40 webinars in each category. So you can still scroll through a lot of educational webinars just on the trial, of course, naturally, but even on the public page. And of course, you can always just check us out on YouTube. Go to our YouTube channel, look for Power Options, and just type in something that interests you. Bull call debits, debit spreads, calendar spreads, poor man's covered call. You'll see a listing of all our webinars over the years that relate to that particular strategy. Now, if you think of it, I didn't see any new questions come in. Sam says, of course, thank you, sir. Stay safe, enjoy the week, and good night. Thank you, Sam. You stay safe as well. Hope everyone stays safe and healthy, of course. Kip says, thank you for another great session. Have a great weekend. Thank you, Kip. I hope you have a great and safe weekend as well. And William, it's good to see you as always, William. Thank you for your questions, of course. And thank you for being with us. But if you think of any other questions later on, remember, send me an email at any time to support@poweropt.com or support@radioactivetrading.com. Remember, you can also call us during market hours at 302-992-7971. And trial members and subscribers, you can always schedule one of those free coaching sessions at any time. It's essentially a 35 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site, answer any strategy questions like we did today. Anything that you need, really, we'll answer that without giving trade recommendations or suggestions, but we can act as a second pair of eyes for management, as we did with Kaushik, and other strategies as well. So that's a great benefit there for trial members and subscribers. Kaushik says, thanks, have a great week, and thank you, Kaushik. Thank you for your question. I hope you got some insight into it. And if you think of anything else you want to follow up on, of course, just send me an email. We'll walk through it. I'll try to get some of these cropped up tonight, if possible. Depends on what time the girls go to bed. But we'll try to start posting some of these archive webinars in the different appropriate sections, split them up for you, grab Kaushik's last 5 or 10 minutes we had a conversation and put it into his main discussion that we had earlier, so it's all together in one, and then separate out some of the other discussions we had for William and, of course, for John also, put those together. And yeah, so I'll try to get those out to you as soon as possible. Last time, everyone, take care. Stay safe. Stay healthy. Have a great weekend. And we'll see you soon next week. Good night.